we know IRS updates, they might not be the most captivating thing in the world.
Right.
But they are important, right?
Absolutely, yeah.
Especially as we head into, the end of the year.
Yeah.
So think of this deep dive as your kind of cheat sheet
Right.
to navigating these latest changes and staying ahead of the curve.
It's all about, being informed.
Exactly.
Being aware of what's going on.
And we've been digging into some recent IRS news that we think you should know about.
Yeah.
First up, let's talk about the Inflation Reduction Act, or IRA.
Okay.
And its impact on the IRS.
Mm-hmm.
Now, you might be thinking, what does a massive spending bill have to do with my taxes?
Right, yeah.
But trust me, there's a connection.
There is.
There's a connection.
Definitely.
One of the key things the IRA did was allocate a significant chunk of funding to the IRS with the goal of modernizing the agency.
Right.
We're talking about improvements to technology, taxpayer services, and yes, beefing up enforcement.
Enforcement is a big one, yeah.
And we're already seeing the impact.
Yeah.
One of our sources highlighted this IRS campaign targeting high-income folks who haven't filed returns in years. Like, they've been using data like W-2s and 1099s to track them down and have brought in over $1.3 billion in back taxes so far.
Wow. $1.3 billion.
That's
a significant amount of money.
That's a lot.
It seemed like they're serious about this.
They're not messing around.
They're not messing around, no.
No.
This signals a renewed focus on enforcement, particularly regarding high earners and potential tax avoidance.
Yeah.
This influx of funding means the IRS has more resources at its disposal, which could mean increased scrutiny on tax filings.
Yeah, absolutely.
That's something to keep in mind as we,
keep that in mind.
Move through
for sure.
The rest of this year.
Yeah.
But it's not all about enforcement, right? There have also been positive changes. Yes, there have been some positive changes.
Like improvements to the whistleblower program.
Yeah, the whistleblower office has been quite active lately.
Oh, really?
Recently awarding $74 million in a single case.
Wow.
That's
huge.
They're clearly taking these claims seriously and want to incentivize people to come forward with information about tax fraud.
Absolutely, yeah. So that's really encouraging.
Yeah.
It's encouraging to see them taking steps to address those issues. However, right.
Yeah.
There are still concerns about the IRS's cybersecurity.
Of course.
Especially given their push towards technology.
Right.
And this just feels very relevant in today's digital landscape.
Absolutely, yeah.
Like, this is a big deal.
Big deal.
Yeah. And reports from the Treasury Inspector General have highlighted vulnerabilities in their systems, particularly their compliance data warehouse and cloud security.
Right. So very important things to consider.
Yeah.
Absolutely.
So the IRS is clearly in a transition period.
I would agree with that, yeah.
Right.
Yeah.
They're trying to modernize and improve services while grappling with these cybersecurity concerns.
Yeah, that's a tough line to walk.
It is.
Trying to modernize, increase your technology and everything, but also making sure that everything's, up to par with the security.
Right. And this need for robust security is likely driving some of their focus on areas like compliance. Which brings us to our next topic.
Okay.
The Employee Retention Credit.
Okay.
Or ERC.
ERC, all right.
Now, the ERC was like a lifeline for businesses during the pandemic.
Yeah,
right?
For sure.
But there's been a lot of confusion around it.
Definitely.
And unfortunately, some have tried to take advantage of the system.
Right. And as a result, the IRS has introduced this supplemental claim process.
Okay.
Specifically for like third-party payers who might have filed incorrect ERC claims on behalf of their clients.
Gotcha.
And the clock is ticking. We're approaching that October 15th deadline.
So we're talking about payroll companies or tax prep firms that are handling like tons of paperwork for multiple businesses.
Absolutely, yeah.
It makes sense that they might have run into some issues navigating these like new and complex credits.
Right, especially during, a pandemic, everyone's scrambling, trying to figure things out.
Exactly.
So there's bound to be some hiccups along the way.
So what does this new process look like for them?
Essentially, it allows them to go back and make sure everything's in order.
Okay.
They can clean up those claims and ensure that only the legitimate ones are being processed.
So it's less about penalizing honest mistakes.
Exactly.
And more about making it right.
Yes, absolutely.
Right. Okay.
It's a win-win.
Gotcha.
Businesses can avoid penalties for inaccurate claims.
Right.
And the IRS can focus on those intentionally trying to game the system.
Makes sense.
Yeah.
Okay, so we've got a deadline looming
Mm-hmm.
and a new process to address these ERC claims. What's the bottom line for our listeners?
Well,
Especially those, running businesses.
yeah. First and foremost, don't panic.
Okay.
If you think you might have claimed the ERC incorrectly,
Yeah.
talk to your tax professional now.
Okay.
This new process is designed to help you fix things.
Good to know.
And even if you're confident your ERC claims were accurate, it's still a good idea to just double-check everything.
Sure. Better safe than sorry.
Exactly.
Okay.
Always better to be safe than sorry.
Okay, so I know we've been laser focused on the ERC here,
Yeah.
but it's not the only IRS update you should know about.
No, not at all.
Our research turned up several other changes, some big, some small,
Right.
but all potentially impactful, depending on your situation.
Absolutely. There's a lot to unpack.
So let's dive into our kind of quick fire round where we cover some of these other updates.
Okay. Sounds good.
First up, we've got modified travel per diem rates. These might sound mundane, but this update is actually relevant for anyone who travels for work and gets reimbursed for those expenses.
Right. And the IRS updates these rates periodically to reflect changes in costs for things like lodging and meals.
Right.
And the new rates just went into effect on October 1st.
Oh, wow. So just recently.
Very recent.
Yeah.
And this means that if you travel for work, you might be able to claim a larger deduction this year.
Interesting.
So it's worth checking out.
Good to know.
Yeah.
All right, next up, we have proposed guidance on the Corporate Alternative Minimum Tax,
Okay.
or CAMT.
CMT.
This one sounds a little intimidating.
It does sound a little intimidating,
It does.
but it's not as complicated as it sounds.
Okay, good.
The CMT is basically a separate tax system designed to ensure that corporations, especially very large ones, pay at least a minimum amount of tax,
Okay.
even if they have lots of deductions and credits.
Gotcha.
The proposed guidance clarifies how it's calculated and applied.
So large corporations and their tax departments will want to pay attention to this one.
For sure.
Makes sense.
Absolutely.
All right, next on our rapid-fire rundown, proposed regulations on the alternative fuel vehicle refueling property credit.
Okay.
Now, that sounds very specific.
It is. It is specific.
It does.
But it reflects the growing focus on sustainability.
Okay.
This credit encourages businesses to invest in alternative fuel infrastructure, like electric vehicle charging stations.
Oh, okay.
The proposed regulations provide more details on who can claim the credit, what kind of property qualifies,
Right.
and how to calculate the credit amount.
Very cool. Sustainability and tax incentives. Who knew?
Right.
All right, last but not least, we have finalized rules on basis reporting for estates.
Okay.
I have to admit, this one sounds a little complex.
It can be a bit complex, yeah.
Can you break it down for us?
Of course, of course.
Okay,
Basically, basis in tax terms refers to the original value of an asset, which is used to calculate capital gains or losses when you sell it. Imagine you bought a painting for $500,
Okay.
and years later, it's worth $5,000.
Right.
That original $500 is your basis.
Gotcha.
Now, when you inherit property, the basis generally gets stepped up to its fair market value at the time of inheritance.
So if that painting was part of an inheritance, the basis might be considered $5,000 instead of the original $500.
Exactly, exactly.
Gotcha.
These finalized rules clarify how that stepped-up basis is determined and reported for estate tax purposes.
Okay, so this is definitely important for anyone dealing with inheritances and estate planning.
Absolutely.
But something you might want to discuss with a tax professional rather than try and figure out on your own.
I completely agree, yeah, and that's a good reminder for all of these updates.
Yeah.
We're just scratching the surface here. The details are important.
Absolutely. It's easy to get overwhelmed by all these changes.
Oh, absolutely.
But that's what we're here for.
That's right.
To break them down and help you focus on what matters most.
Exactly.
And speaking of what matters, let's shift gears a bit.
Okay.
We've covered a lot of ground here.
We have.
The IRA's impact on the IRS, that new ERC claim process, a whole slew of other updates.
It's a lot to take in.
It's clear the IRS is changing, embracing technology, stepping up enforcement, and becoming, increasingly data-driven.
They are. It's a significant shift.
It is.
And it impacts everyone.
Yeah.
From individual taxpayers to large corporations.
Absolutely. We don't want to just, fill your head with, facts and figures.
Right.
We want you to be able to use this information, right?
Absolutely.
We want to empower you to take action.
I love it. And one of our sources, a tax professional, emphasized this point. saying that preparers should already be thinking about filing concerns as we approach year-end.
Filing concerns?
Yeah.
That has a serious ring to it.
It does.
What exactly does that mean?
It means,
what should our listeners be doing right now to prepare?
Yeah, it's about being proactive.
Okay.
Think of it like getting all your ducks in a row well ahead of tax season.
Okay, so no last-minute scrambling for receipts.
Exactly.
Yeah. Okay.
Now is the time to review your business expenses.
Oh, okay.
Have you taken advantage of all the deductions and credits you're eligible for?
Right.
We talked about the alternative fuel vehicle refueling property credit, for example.
Right.
That's one to consider if you've invested in EV charging stations.
Right. Those incentives are there for a reason.
Absolutely.
Yeah.
Absolutely.
Right.
And if you're a business owner, especially if you claim the ERC,
right,
connect with your tax professional.
Okay.
Make sure your paperwork is in order. And discuss any potential impact of these new rules on your specific situation.
Consider that meeting booked.
Yes.
Now, we've covered a lot of ground in this deep dive.
We have.
The IRA's impact on the IRS, that new ERC claim process, a whole slew of other updates. It's clear the IRS is changing. They're embracing technology, stepping up enforcement, and becoming, increasingly data-driven.
For sure. It's a significant shift, and it impacts everyone from individual taxpayers to large corporations.
Absolutely. So where do we go from here? What's the one key takeaway you want our listeners to remember?
Stay informed.
Okay.
Pay attention to these updates.
Yeah.
Talk to your tax advisor, and don't be afraid to ask questions.
Love it.
Knowledge, as they say, is power.
It is.
Especially when it comes to navigating the ever-changing world of taxes.
Couldn't agree more. We've seen how these updates can directly impact your bottom line.
Yeah.
So staying ahead of the curve is crucial. This has been a fascinating deep dive.
Yes.
And it makes me think, if these updates are any indication, what does the future hold for the relationship between taxpayers and the IRS?
That's a great question.
It's something to ponder, right?
Yeah.
As we navigate the rest of this tax year. Until next time, happy filing.
Happy